Hello everybody and welcome to this video about Rover. I am going through the full bull case for Rover in this video, and this may be a long video, but I have well over 10 sections for a video where I just want to walk you through the thesis of Rover and the website rover.com, the app Rover itself, and why I think this might be a very good stock to own for the long run for myself and myself alone. This is entertainment. This is not investment advice. Of course, but I like a lot of things that I see about Rover, right? And it's pleasant discovery to find this stock a few days ago. I was very happy about it. So let me get started. Let's start with the pet industry and the pet megatrend. And why is this a megatrend? Well, first of all, pets in general, I've been a megatrend for decades now. It starts with the end of the use of dogs for hunting. They used to mostly be used for hunting, but today they've become companions. So that's one of the big aspects. And so you often hear in the media people marvel at how much money is spent, for example, on dog food. Like that's always a very impressive number. It's a megatrend. More and more people are getting dogs, and this is something that has been going on for a while and may continue. More and more people are lonely, and thus they're getting dogs. You have young single people who do not engage in family formation, or do not have a spouse or anything, and they get a dog, and it brings them company, and they're very happy about it. Same is true for empty nesters and older folks. If you're lonely, you're gonna get a dog. It's a solution to a lot of people. They provide, cats and dogs in general, provide a solution for loneliness. There's also this other megatrend, and this megatrend is perhaps more than 100 years old, but the whole idea that dog breeders, a lot of people acquire dogs from breeders, they make these dogs and these cats cuter. And each generation after generation, the dog becomes cuter, which means that people they can't resist. People just want to adopt these cute puppies, if that makes any sense. And to remain a little bit scientific, there is a true phenomenon for this. There's a true reason for this happening, and it's called the "what is beautiful is good" phenomenon. And you can look it up. It's a real thing. We as human beings are attracted to things we find, quote unquote, cute. And dogs and cats were bred to evoke this feeling in us, which makes us want to acquire them. So that's for the really qualitative, fundamental stuff. Now, in parallel, there is also another megatrend, which is people are traveling. People want to travel, but they still want to own pets. So if people want to travel and they want to own pets, this is where Rover comes in, because Rover is obviously a pet boarding app, mostly in a pet services, pet care app in general. And so because of that, as more and more people, as travel has more or less normalized to 2019 levels now, but as the traveling industry keeps going strong over the future years, this in parallel should develop itself, because if you travel as a whole family, you may not bring your pet with you depending on where you go. It's always a major problem for anybody traveling with pets. It's a major problem. How can you travel with a pet? Well, the answer is you really can't. It's really complicated, and if you can, it's very expensive, right? You can't really bring a pet on an airplane, for example. So that's one aspect. Furthermore, and there's a reason why I love this megatrend, is the pet industry itself is highly standardized worldwide. It's roughly the same around the world. There's more than two, but there's only mostly two types of pets that you find around the world. It's cats and dogs. That's it. Sorry, mini horses. They never took on, right? Even though they have benefits of their own, I guess they never took on the mini horses, or any other pet trend has never taken off as much as cats and dogs. That's the two animals, which is good because it creates a very standardized industry, and catering to the needs of these pets is really the same everywhere, and they have roughly the same needs, more or less. So need number one is you gotta feed them. So if you go on vacation, you have to have someone to feed them, right? Because otherwise there's issues, right? You have to feed them. The second one, of course, is that what Rover romantically calls potty break. But yeah, you you have to make sure they go to the bathroom, right? That's this whole idea. And so if you go on the Rover platform, you'll have people who say, oh, the dog goes in the yard, every 2 hours, every 1 hour. Like that's what you need to manage, and that's what Rover helps you do. And for cats, it's a similar thing, but it comes with cleaning the litter box for cats. So that's the same here again. Same type of management. And then lastly, they need some level of interaction. Otherwise, your pet is going to be depressed if there's no interaction. So they need social interactions. They were bred for being social, these pets. And so what would be the social interactions that pets need? Well, for dogs, it would be things like walks. And for cats, it would be things like play. And actually, Rover categorizes that as play dates for cats, for example. It's a funny way to think about it, but that's how they do it. And walks for dogs. So this is pet care in a nutshell. Very standardized industry. Only 2 main pets, and the needs are roughly the same. 3 main needs that are roughly the same. So that's another big thing going for this megatrend. The third trend, and I guess some people may be sad to hear this, but it is a real trend, is that a lot of people decide to have pets in place of children, in replacement of children. I mean, many people have both, but it's obviously very, very different. We're not talking about the same thing. However, people who do not have children tend to humanize and premiumize their pets, pet humanization and premiumization. And you see this with the spend. The amount of spend in the pet industry is growing much faster than the amount of people getting pets. There's more people getting pets on the one hand, but then on the second hand, they spend even more. And if you look at surveys, and this is from Rover, but if you look at the surveys on pets, 66% of U.S. households have pets, which is insane. I mean, that's very high. And if you ask questions like, "Is your pet part of the family?" and that's a major distinction compared to just even 30 years ago. 96% of households that are asked the question consider themselves parents, and they think their pets are part of the family. They say, "I'm a dog parents." 95% of a person having cats consider themselves parents. And the fun way that I like to talk about this is just drive around and see how many stickers you see on the back of cars. Say, proud mom of a, and then it's like insert the name of a dog. These tags are all over on cars. Like I don't know. I'm the proud mother of a Chihuahua, and you see these tags, and it's like it's a real thing. You can see it. If you are a pet owner, you might not consider yourself an owner. You might consider yourself a parent. And of course, this whole trend of humanization and premiumization of pets means that this industry has a lot of great features, such as people keep spending more, putting pets forward, but also it's recession resistant, because life expectancy for a pet is 10 to 15 years. Recession or not, the pet is going to need to be taken care of. So this is a recession-resistant business. Your pet follows you during recessions and during economic booms. So this is for the pet megatrend itself, and I think this is a trend that is tremendously growing. Another thing I could have said, for example, is the work from home trend, which I believe is a mega trend. Working from home will be more and more pervasive, and as people spend more and more time home, they will want to have a pet to be able to get out of the house, give yourself a good reason to get out of the house, and to not be lonely. That again, pets. I think the most fundamental aspect of our lives that pets solve for is loneliness. Because once you have a pet, you are not lonely. They take a lot of time. So, anyways. So that's enough for our megatrend. Now, moving on to the total addressable market. And this is very important because this is an investment, right, Rover? So what's the total addressable market? 87 million households in the US, 38 million in Europe, and 9 million in Canada. So the US is, quote-unquote, their mature market. But you can see the market still has a tremendous amount of growth. We'll see later that they have about 4 million customers, 4 million repeating households who use them Rover, and there's 87 million households in the US alone, and they have about 4 million of those. So you have one order of magnitude, a room to 10x that. At least, in my view, because of course they're going into Europe now. They just started Europe, and Canada is a little bit older for them, but they just started that. So if you look at how much they've captured of each market, how much they say, they think right now they have They think right now they're not even scratching the surface, if that makes any sense. And the commercial market itself overnight is not even scratching the surface at 3 billion. So what they think is that over time, this total addressable market in the US alone could be 79 billion, as much as 113 billion. And a little bit like Visa or MasterCard consider cash to be their main competitor, this is kind of the same thing for Rover. Sure, there's kennels and boutique dog hotels here and there in fancy parts of town and fancy cities, but that's not the real competition. That's not the real target. The real target is what? It's the friends and family and friends. Typically, that's still what is mostly done. It's like you have a pet, it's your family and friends that are going to take care of your pet while you're gone. It's the way it's always been done. It's still the way that it's widely done, and Rover is trying to address that. Important to say, I've listened to a few conference calls from Rover. As people move more often, these family and friends disappear, which is very interesting, because let's say you start out life, you live in the same town as your family, then you move on to the next town, and then all of a sudden that family and friends option, which used to be available, is not available anymore because you've moved, or sometimes it is your friends that move or your family that moves, and if you stay put, well, you lose that. So essentially, it's addressing a real need in the market, which is less than perfect. Having to use a parent to watch your pet is less than perfect. The friends that watch the pets, they may not be. Hopefully they're pet lovers, but they may not be pet lovers. They may not be pet owners. Going through a platform guarantees that you're going through someone who is actually a pet owner and a pet lover, as we'll see in a second when I present the platform and the business. So that's the total addressable market. A huge, enormous potential. It can well over 10x. And when I look at the numbers, I think this is a business that could be 50 times bigger than it is today. Over the long run, right? Over a 10-year period, over the long run. But 50 times bigger is more than possible. Remember, they only have 4 million households that are recurring customers. And this is a company that is just starting to enter new markets. So, moving on. So what is the value proposition? And this is important. Especially for a product like Rover that we'll see later relies a lot on word of mouth. The question that I want to ask is this product much better than the alternative, which is mostly using family and friend, and perhaps using a boutique dog hotel? Is this much better? How many times better is this product? Now, Rover addresses this, and they show us this nice little perceptual map right here. And they tell us, well, look, Rover is able to have a variety of needs, and we're able to use technology and leverage technology, and therefore we do much better than local mom and pop shop, independent professionals, friends and family neighbors that don't do as well on either on these categories, and that is entirely true. They don't do as much on these categories, but there's more categories that we can add to this perceptual map. You could do a perceptual map like this on so many categories. So here are some of the more categories than I see. So Rover, the point of this slide is Rover is better than legacy competition for both of these, technology and variety of needs, but also on other things. So I see more benefits. Number one is you access inexpensive human capital, and by inexpensive I mean they're cheap. When I look at Rover, it's not uncommon, and maybe $30, $28. Maybe $35 at the max. per night for an overnight stay in my area that I looked at. So that's 12 hours of walk for $30. So obviously, and this is an important point in my view, obviously, pet sitters don't do it for the money. That's my view. This is something that pet sitters do because they love pets and they want to spend more time around pets, and thus they will take a nominal fee. I mean, keep in mind, I mean, you have to cover some of the costs of doing that, right? The pet's gonna require a lot of your time. You may have to give them treats, to feed them, to get them outside. There's so much to think about here. And it's obvious that this does not cover it, and not to mention there is the take rate of Rover, right? There is the commission of Rover. So to me, there is a non-economic payout for the service provider, right? The service provider of pet services does it firstly because they want to be with your pet. Secondly, they do it because they want to make a little extra income. But I do not think that extra income is the main driver for people registering in this platform. And this is further seen when you look at profiles and when you see the number of profiles and pet owners who say, oh, I'll only take one pet at a time. Like, if you only take one pet at a time, you're clearly not trying to make this a business. And also, you have a lot of hosts who have hosted pets very, very few times in the year, right? I mean, they may do it 5 times a year. So this to me is very important, because you're gonna get a service of people who really want to help and are really engaged in helping you out and looking over your pet, and their main motivation is doing it because they love doing it. And secondly, the money. And I think this is very important in providing a level of satisfaction to the pet owner that you can't find in a commercial business. In a commercial mom and pop dog hotel that has rent to pay, you're never going to find this attention, right? This level of attention for your pet that you would have with just a family that already has one pet that's like, okay, let me have another pet for the weekend. Right? I don't think you're going to find that. So that's a very powerful value proposition. Of course, another value proposition is that Rover accesses inexpensive capital, i.e. homes or apartments. Right? So this is the same as Airbnb. Mom and pop shop has to rent their commercial building where they do the boarding. Right? You don't have to do that when you go for a platform. So that's a big advantage of a platform. Right? And the technology, and I've said one-on-one detail, many sitters only accept one dog at a time. You obviously can't replicate that if you're a mom and pop boutique dog kennel, right? Or dog hotel. And then last thing is technology allows owners to follow their pet in detail. So you can chat with whoever is sitting your pet. You can exchange messages, you can see videos, photos. The technology makes it much better. So, could a traditional business offer a similar service? The answer to me is clearly no. It's not possible. If I think about this from a first principle perspective, this is clear as day to me that this is going to take over the mom and pop business, and this is going to take over the more commercial dog boarding facilities. That's how I think, and just think about how Uber, for example, how did Uber revolutionize the drive to the airport? 15 years ago, you needed to go to the airport, you asked family and friends, right? Hey, can you take me to the airport at 5 a.m.? And family and friends feel obligated to say, yes, I'll take you to the airport at 5 a.m. Today, how do most people go to the airport, even if they have their friends living in the same town, right? They go to the airport taking Uber or Lyft because it solved that problem. Right, so Uber and Lyft was much better than the alternative, which was mostly family and friends, and secondly taxi. And they beat taxis. Taxis are gone. Same is true for this. I think for this. In the past, pet owners had no choice but to ask friends or family to look over their pets. Today, they are independent and they can go on Rover and choose someone on Rover and not have to bother any family member. They don't have that strain of having to ask. And I think it's a big deal. And that's why I think we are going to win. And I think we are going to win over a legacy business, even though whether it's Uber or Rover, what they're trying to win over is the old market, which was not monetized. You're monetizing a practice that didn't used to be monetized. So to me, it's a fully new business model. It's a better business model than an alternative, and very an old world brick and mortar business, in my view, can't compete against that. However, there could be some competing platforms. That's entirely possible. So let's look at some of the competing platforms, of which I will tell you there is only one. Per my research, there is only one, and it is called WAG. And so let's look at the magnitude, orders of magnitude. It's important to think in terms of scale. So you can see, so this is the App Store, but if you go to the Android Play Store, you'll find the same thing. So this is the app of Rover, 4.9 out of 5. Think about that Net Promoter Score, 4.9 out of 5. That's an amazing company. A lot of people love Rover. And how much bigger they are? Well, if I look at the ratings, if I just look at the ratings, and both ratings are positive here, so it's not. I think it's relevant to use the ratings. We can see that Rover has exactly 8 times more reviews than WAG. So I think it's fair to say that Rover is 8 times bigger. So let's round it up to one order of magnitude bigger. And I just want to point out that if you look at the ranking, and Apple shows you the top 100 apps in travel, and of course Rover is listed as a travel app because dog boarding is the main use for Rover, right? Dog sitters. So they're number 35 in travel and number 18 in travel. And these are the two. There's only 2 dog apps in the App Store worldwide. It's these two. One of them is 8 times bigger. The one we're interested in, Rover, 8 times bigger than WAG. But this is where I think this is even more interesting. And if you like Airbnb, you're going to like this. So when I look at Airbnb, alternatives, so Airbnb is number 3. The number 1 and number 2 travel app is Uber and Lyft. But after Uber and Lyft, it's Airbnb, number 3. And then their closest alternative, which is hotels, right, is ranked number 4. So okay, Airbnb is a little more prominent on phones than Expedia, which right there is very telling as to the power of Airbnb. Expedia is number 4. Airbnb is number 3. That's very telling. But you can see Expedia is clearly a competitor to Airbnb. And if I scroll down to the top 100, Airbnb has 14 competitors in the top 100. 14 competitors. 14 of them. And you can see they're pretty close, right? Then you have Airbnb, so you have Expedia, then you have Booking, then you have Vrbo, which Vrbo is even closer of a competitor to Airbnb. So there's 14 total. If I look at, like I said, if I look at the dog business, the dog sitting business, there is only one competitor, and that one competitor is way down the list, at rank number 80. So, in my view, this is a business that is much more monopolistic than Airbnb, because if you're 8 times bigger than your competition's likely getting the breadcrumbs, if that makes some sense. So, I'm very impressed by this. And the ratings, lastly, of course, is a 4.9 out of 5. I said that already, but it's very, very impressive. And this links to the next slide really, really well, which is word of mouth. This, if you hate marketing spend, you're going to love this stock, is how I will summarize that. If you don't like marketing spend, you're really going to love this stock, because this stock has most of their new customers coming through word of mouth. And these are surveys that they do, and you can see in top 10 cities worldwide, in 2022, 52% of new customers were acquired through word of mouth. Right, and so how do they find this out? Right, it's like, oh, how have you heard about us? Friends and family, have you heard about us like that? Well, if you say that, it's word of mouth. If you say, have you heard about us on Google? That's not necessarily paid, right? You didn't necessarily pay for Google. They also have media, like earned media impressions that they get through their stories and everything that they do. Rover, very interestingly, I've listened to their conference call, and they talk about how they're fascinated by this book called Attention, and how to get attention on social media. And so if you go on their blog and read their blog, most of their posts are very, very, very funny, and they're related to pets going to the bathroom, essentially. They're mostly related to that. And the reason why they do that is because funny posts tend to get shared so much more on social media. So this is a company that tries to be humorous to get free impressions. And so they make a bunch of jokes related to pet catastrophes and pet disasters and all sorts of stuff. And it makes for very easily shareable content. And in fact, I mean, pets is one of the most shareable content. It's like a lot of people share that content. So that's why they get a lot of word of mouth. And if you look at their marketing, I mean, efficient to say the least. As you know, I would definitely not mind seeing them spend 50% of their revenue in marketing. But me, I usually like marketing. I think marketing is a great thing to speed up adoption. I guess I am disappointed to see that they're only spending 21% in marketing. And on average, their target is between 18 and 25% of their revenue is what they target to be spent on marketing, which is low compared to so many stocks that I follow. I follow a lot of stock that spend 50% on marketing because they want to grow faster. Rover must have a good reason not to spend a lot on marketing. I think a lot has to do with the market because, of course, their stock got punished so much because, the market, the money managers, they think very, very strongly. I mean, they're deep thinkers. And so SPAC bad. That was the thing. SPAC bad is literally the thought process that can explain the stock chart of Rover. SPAC equals bad. I'm not even sure they had an equal in their thought. SPAC bad. That's the reason why these stocks are trading down, even though they are outstanding companies. I mean, this is an outstanding company as much as I've been looking at it. I mean, it's growing super fast at 35%. The growth is there. And they're spending close to nothing in marketing. And by the way, they have GAAP profitability now. As I'll show later, they've achieved GAAP profitability. Anyways, moving on to the network effects, and this is why I think this is going to lead to a monopoly. So network effects, they have different names in business. Sometimes they're called the flywheel, other times they're called the snowball, but the whole idea is that, for example, the flywheel is really, really hard to spin, but once you spin it, it's unstoppable. That's why you'll see a lot of businesses, especially in Silicon Valley and tech in general, they'll try to have these flywheels, and we can understand more bookings there is, right? The more word of mouth you have, and the more word of mouth you have, the more bookings you have, right? More bookings, more word of mouth, more bookings, more word of mouth. And bookings leads to better data, leads to better matches, leads to better booking in their algorithm. And so a lot of it has to do with match between the right pet sitter and the right pet owner. It's a fascinating business in my view, and when I look at them, I see very monopolistic trends in what they're doing right here. Okay, let me move on to lifetime value of a customer lifetime value. And this is very interesting. So you can see that their cohort. Now, keep in mind, these numbers look low, but this is profits, right? This is how much money they make per cohort. So don't forget, like if you're going to have a $100 booking, Rover is going to make like $15 on a $100 booking, if that makes some sense. So to get to $100, you need a customer to spend $700, $800, $900, depending on the type of service. We're only talking about the profits here. So you can see that their early cohorts are nearing $100 in profits, $100 in profits for their early cohort. Now, keep in mind, as I've noted, they pay almost nothing to acquire new customers, and the lifetime value of a customer is very important because that's what's going to yield profits. And customers, once they sign up, they tend to stay. So, per my analysis, Rover currently has about 4 million active customers that come back, right? So if you were to assume that over the next 10 years, these 4 million active customers, they don't grow and they don't go away, but they're going to grow, of course. This is a company that grows at 35% a year. So they are definitely going to grow. But even assuming that they're not growing, it's just 4 million, and let's assume $150 over the next 10 years, which we don't quite have 10 years here if you look at this chart. We don't have 10 years. We have a little more than 5 years in general here. We don't have 10 years. So if you look at 10 years and you assume $150 per active customer over 10 years, over the next 10 years, they have 4 million customers. That's $600 million in profits, period, over the next 10 years without adding any new customers. And so the question is, this is a company that trades at 985 million. Spoiler, it's a cheap company, as you'll see. And just based on their current customers, over the next 10 years, I have no issue seeing them making 600 million. So is this? I mean, this is cheap. This is a very, very cheap stock. And of course, when you grow your sales at 35% a year, you're going to double your number of customers in what? 2 years and a half. In 2 years and a half, you're going to double your number of customers. So this is obviously a very, very cheap company, and a company that's growing very fast. And I'm very pleased to see these numbers. I'm very interested in this company. You may know that platforms are my favorite business model. They are my favorite business model. If the rover does not have to make the product, right? The product comes to the platform and signs up, right? That's the pet sitters. They come to the platform, they sign up. They are the product, not Rover. Rover supervises the providing of services. They're the supervisors and they have a take rate, but they're not the product. This is great business. So anyways, the recurring business. So let's remember that this is actually a recurring business. So if you look at the retention, 82% of the bookings are repeat bookings. So to me, this is as close as it gets to a recurring business. Maybe not as good as SaaS. SaaS, they will have 90% recurring, but at 82% of booking being recurring, I am more than willing to put this company in the recurring business category. To me, this company is definitely a recurring business. And why is it a recurring business? Because this is a company that creates tremendous value proposition for pet owners, right? So they have a guarantee, and from my research, $25,000 vet guarantee if there's any issue. Pet care instructions, customer support, in-app messaging, photo sharing, calendaring. You can see where your dog took a walk. Ease of payment, certainty of payment, many features, tipping features, cancellation features. This is all very important stuff. And then they have the matching. They use data science to match, because not all pet owners will qualify for all pet sitters and vice versa. So a bunch of their platform has to do with matching the customer. So whoever needs their pet boarded to the right sitter. And that uses AI. And the better the match, the more people are likely to come back. And in fact, most people end up using similar dog sitters or mostly similar dog sitters. And that creates a relationship through Rover, and that creates repeat customers. Like I said, at 82%. So to me, this is a platform that has a recurring business component that you don't find in all of the platforms. Many platforms you find it, but not all of the platforms. And I like to see that. For example, eBay doesn't really have a recurring business component. You go on eBay because it's the cheapest, but the next day you might go on Amazon, right? This is not like there's an alternative. So there's an easy recurring revenue component. So I love that about this business very much. Then moving on to optionality. So what about optionality? Rover has a lot of optionality. So as we know, they just started Europe, and they're mostly big in the US, and they're slowly growing in Canada. So that's the idea of Rover right here. That's what we're focusing on right now. But there's more things that they have in the future that they're going to be able to offer in the future. First of all, cats and dogs, they are the 80-20 rule of that, and they're heavily focusing on that. But you have a little bit, I just want to say a little bit, because this is never going to be a huge market, but you have a little bit of optionality when it comes to other types of pets. So, that's going to be when the growth stalls. That's going to be a nice extra 10 to 20% to the business. But obviously, the bulk of the business is still cats and dogs. But they have a little bit of optionality with new pets and new services. They can offer new services too. Then international to me is one of the biggest opportunities. So like I said, Europe just got started for them, and I was listening to the CEO. The CEO said, Europe really feels like 2013, 2014 the US felt. The US felt like Europe in 2014, is what the CEO said. So a lot of very positive feedback coming out of Europe, and so they're growing that international coverage. And of course, the question is, are we going to move beyond Europe? Right? There's more than just Europe. I mean, U.S. and Europe are tremendous pet markets, but they're not the only markets. You have other markets. You have Australia, New Zealand. These are not too small of markets. You could go there. You have parts of Latin America where pet ownership is common. So and keep in mind, this is a business where it's a copy and paste. You copy and paste to a platform, right? So it's easy to do. I mean, it's easy. It's complicated, but it's relatively easier than a lot of brick and mortar businesses. Brick and mortar businesses can't just copy the business and just translate it and release it in another country. Rover can do that. So then they have new products like strategic partnerships. So this is actually a wholly owned subsidiary that they have, which I think is called Good Pup or something. But they launched virtual dog training. So that's an example of a strategic partnerships in that case for themselves. But I can easily see them having partnerships with veterinarians and. What could you imagine? I don't know, teeth cleaning, grooming. You could have so many partnerships that they could have and add to the business, because now they have this valuable database of engaged users that own pets. And then the last one, and we know platforms typically make money like that. A platform like eBay or a platform like Amazon Marketplace is a platform. They have an ad business, right? And so we can easily see Rover have ads for, say, dog food on the website. So in my view, this is a business that has multiple growth levers in addition to do a multi-bagger on their revenue, right? They can multiply their revenues multiple times, in my opinion, just focusing on getting more pet care away from friends and family and into the Rover platform. I think this is where much of the business is going to come from for the foreseeable future. Now let's look at revenue growth / adoption. So revenue growth year over year is 35%. And it's a good thing I don't do Q over Q, because if I did Q over Q, I would, and I analyze that, I would find you a much higher growth rate. Now that would quarter over quarter wouldn't work for Rover, because Rover historically has a weak Q1. The reason why we have a weak Q1 is because Q4, right, the holidays, Christmas, and all that stuff, Q4 is usually a very strong quarter for them, and so Q1 is a bad quarter, and so you often get great comps between Q1 and Q2, and you can see over the long run, this is Q2 2023, this is Q1, you always have this jump. The growth rate year over year is 35%, and analysts are forecasting a growth rate going forward of another 35%. And I went back to the prospectus. They're going public prospectus. They went public for a SPAC. But when you look at the prospectus, which I went back to, and this goes through their launch, etc., you can see that the number of services booked has not stalled. They have, aside from 2020, and even in 2020, they still had decent levels of growth while everybody was at home. That growth curve is, it's I don't have my product adoption S-curve in this, but if you know what my product adoption S-curve looks like, that growth curve, if you look from the founding of the company, it looks suspiciously like the beginning of an adoption curve. And so the question is going to be like this, and then one day it's going to be like this. I don't know if you can see my cursor, but this looks suspiciously like the beginning of an adoption curve. And again, the numbers back that up, but I think more importantly is the qualitative analysis backs that up. Everything I've told you so far backs that up. Yes, pet is a growing industry. Yes, they're taking business away from friends and family who usually did it for free. They're monetizing that. The platform is growing. The platform is the top app for pet services on the App Store. They're marketing, word of mouth. To me, this looks very much like the beginning of an adoption curve. and at 4 million households, they have just begun to scratch the surface. At least that is my opinion. Now let's look about valuation. Now you may know that I've been attracted by this stock at first through a valuation screener. So what I do on this channel is oftentimes I'll publish videos on different industries, and I'll try to spot the opportunity. And this one was spotted as an opportunity. Maybe not as cheap as a stock like HIMS or StoneCo, but getting there, and definitely I wish I hadn't found about this stock, 6 months ago, because 6 months ago it was as cheap as a StoneCo or as a HIMS. At a 0.18 in my spreadsheet here, remember the average on my spreadsheet is a 0.5, 0.6-ish, depending on the season. So this is a stock that's up to 3 times as cheap as the average growth stock in my coverage universe. Now, how do I say it's 3 times as cheap? If you're familiar with the channel, you know how this works. But a 0.18 means that I'm paying only 0.18 for each percentage point of forward growth. Each percentage point of forward growth, I am paying a 0.18, which is dirt cheap. It's entirely inexpensive. This is a company. Gross profit is excellent at 77%, and the enterprise value market cap is a little higher because we have a lot of cash on the balance sheet. But the enterprise value is under $1 billion, which is the true cost. I mean, it's what matters. What matters is EV, not market cap. So this is stunning. And this is a stock who, if you cherry pick the data and if you look from 2023 to today, it looks like it's very expensive. It looks like it went up more than 100%. Wow, you're crazy. Why buy something that went up 100%? But if you look back and if you look at this chart, you'll find that this chart is so familiar. Like any investor in innovation is familiar with this chart. I could take you any SPAC essentially as this any worthy SPAC, and there were a few SPACs that were not very good, but the asset managers, the money managers have just put Rover in the same basket of SPAC, and they did this very complicated analysis. SPAC bad, that's the analysis they did, and they sold off the stock with everybody else, and then we realized, oh, wait a minute, maybe we made a mistake. And now this stock is still 35% down from when they IPO'd. And ask yourself the question, how much bigger is the company today in terms of revenue than it was when it IPO'd? And the answer is almost twice as big. The company today is almost twice as big as it was when it did the SPAC. Yet it's 35% cheaper. Go figure. Business is recession-proof. Travel's coming back. Pet owners are not going to stop using pet services and leave the pets at home for a week while they go on vacation. That's not something that they do. They're going to get services for the pets. So, to me, this valuation is very, very, very cheap, and this is a stock that could make a long-term hold. A 10-year hold. Could I see a 10-year hold for this stock? Absolutely, in my view. Management and dilution. So as you know, I don't. This is not a usual part of my analysis. I typically think the business is much more important than the leadership of the business, and I always take Steve Ballmer as an example of that. Right? If Steve Ballmer did not kill Microsoft, then it means that Microsoft really had a good business. If you see what I mean, look up Steve Ballmer and you'll see. So that's typically what I take. But nonetheless, it's okay, because if you care about management, this is great for you. If you care about management, this is a company that is founder-led. The founder is still a CEO. The insider ownership is 11%, which is high. It's high. 11% is high. The productivity per employee is 404,000 per employee. They only have 500 employees. So this means that the employees are not slacking. These employees are working hard. They are productive employees. They bring in more revenue than they make. I can tell you that. So this is a great metric. And dilution, if you care about dilution, and as I've said multiple times on the channel, dilution is not something I look at. It's not something I care about. Look at Tesla, one of the best, depending on when you do the 10-year period, stock, the best stock of the past 10 years, and it was diluted 3 times. So it had 300% dilution, and the stock was still the best performer. So I typically tend to not really care about dilution and not look at it. But if you care about dilution, just know that it's been under 2% per year so far. And so the dilution is really non-existent, almost non-existent, which is excellent. Absolutely excellent. And so Will I buy this stock? That's the final question, right? Will I buy this stock? And I have made my decision. I've been looking at this stock for a while now. The answer to that is yes. Yes, I am buying this stock. I will be starting a small position in Rover, and I always start small. And then I'll be adding based on market opportunities and other opportunities in the market. Essentially, the stock looks very cheap right now. If Tesla goes back to $100, sorry, Rover, the money's going to Tesla. Money's not going to Rover, right? If everything shoots up and Rover stays at the same level, well, Rover is going to grow in position. Essentially, it's all a matter of pairs. Like the way I look at my trading is I look at pairs. I look at my valuations of stocks relative to all of your other stocks, and whatever weekly allocation, because I give myself a weekly allocation, weekly new money to put into stocks. That weekly allocation gets allocated to the most attractive stock right now, which is why I don't know what size of position it's going to be, but I know I'm going to start a small position because I like these numbers. I like them better than Airbnb, for example, even though Airbnb now, I guess Airbnb now, I can't really add to it. It's going to go into S&P 500. That stock is going to get expensive now. Anyways, it's kind of a joke. I love Airbnb just as much. But in conclusion, will I buy Rover? The answer is yes. What do I love about Rover? So that's the conclusion of this video. What I love about Rover is they have 4 million customers, repeating customers, right? Recurring customers, active customers as they call them. But right now, their total addressable market right now is 134 million. So, is this a company that could have 40 million customers? Right? I think so. I don't see why not. I mean, ask yourself how much of a market share of taxis does Uber and Lyft have? It's overwhelming. It's like the whole thing. I'm not saying they're not going to get the whole thing, but if they could they get to 30% of that market? Could they get to 20% or 30% of that market? If they do, that's a 10x. If they do, no investment advice, but if they do, that's a 10x. Not to mention, of course, 10 years from now, it's not going to be 134 million households that have pets. Maybe it's going to be 160 million households. So this is the beauty of investing in growth, is you're investing in a mega trend that is still growing. Pet adoption is still growing. Loneliness is still an epidemic. People who are lonely still want to get pets, right? Pets are still considered and treated close to children, right? These are mega cultural trends that don't change this fast. So I'm heavily confident that there's going to be more pets in the future than there are today. So the total addressable market, in my view, is barely touched. It's a platform. Platform is my favorite business model. I've said that before. And like I said, the mega trend is right here. And I won't go more into it, but more people are going to get pets. More people are going to spend more money into pets. There's more international opportunity beyond just Europe. I've mentioned Australia, New Zealand. That's a big market. Latin America is going to be a big market too. And you have optionality. Now they do a little bit of puppy training. What if they do dog training for all dogs? And what if they do grooming? And what if they do teeth cleaning and dog clothing and you name it? Who knows where this is going to go in the future? But there will be more services given to pets because of the humanization of pets megatrend, and this is a megatrend. So very happy to own this stock. By the way, if in full transparency, I do not own pets. I do not have pets. So keep that in mind as you go through my analysis. This is the best of my knowledge, not being a pet owner. If you have more additional information for people who are pet owners, or if you own a pet and you've used Rover, please leave it in the comment section. I'm starting a position, so I'm very, very interested in your opinions. Thank you so much for watching. This was not investment advice. This was just entertainment. I hope you were entertained. I appreciate your likes, your subscribes. Takes me a while to do these videos, so I really appreciate this. This video took me like 2 days, so I really appreciate it. If you not 2 days full time, but I've been working on it on and off for 2 days. So I appreciate if you can give me a like and subscribe to the channel. Follow me on Twitter as well if you can. Follow me on X. Thank you, and have a wonderful day.